Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. I hope everyone is doing wonderfully well as we get focused in on the trading day today. Lots to go over. Big drops yesterday, monstrous moves in the market, especially in the semiconductors. A lot to cover. All right, so let's get right into the action here. Let's take a look at the S&P 500. Number one, the S&P is basically flat to positive today. So it does seem like calm is coming back. We're seeing the semiconductors, namely stocks like NVIDIA, get a little bit of a bounce here. Take a look at NVIDIA. This is where it closed yesterday, let me see, right over here. So if we take a trend line here, we can see exactly where it's traded. You can look here. This is the closing line from yesterday at around 119 and change here. And again, you can see it's generally traded neutral to positive the entire time, although significantly off its 125 highs. Now, again, the culprit here is pretty simple, right? We heard about this DeepSeek, this new AI tool that essentially puts OpenAI's ChatGPT to shame. And essentially that creates a scenario where it's much cheaper to run and you can run this new AI off of lower grade chips. And that's really where the kind of the issue comes in, where you've seen NVIDIA, who has these high grade chips, taking a big hit. Now, NVIDIA came out and defended itself and said, hey, listen, this is going to be lower bar of entry for people wanting to get into AI and data centers, and therefore we're going to sell more chips. But the kicker is their chips, basically the lower, cheaper ones, could be utilized. Now, overall, do I think they're still going to do monstrous revenue? The answer is yes. I do think this was a little bit of an overkill to the downside in terms of these runs, but we have to, again, keep in mind that the markets react first and ask questions later. So yesterday, what did we see? We saw massive drops, as much as 10% on the SMH. Now, speaking of the SMH, we've got to look at this chart here, guys. SMH, take a look here, guys. I'm going to get rid of this trend line for the time being. This was a flag pattern that I have alerted you guys to now for the last probably month or two and said, guys, flagpole, inside bar chop. This is bearish, right? And look at what happens yesterday. The gap below the line, which is what's called a river theory, where it takes a bridge over by gapping versus going through the river, and ultimately the bigger sell-off to follow. Now, again, semis are bouncing just a little bit today, so we'll watch and see where these things go. But ultimately, I would expect maybe a little bounce, retrace to the scene of the crime, and then further downside to go to that next key support level. All right. And again, we have some other key levels. This is going to be the really big area right here. If we take a look right here, this pivot high from 2021 goes right through this little pivot here, this low, and this low, and that is around 211. All right. So again, while you could day trade for bounces today, even yesterday, there were some opportunities. For me as a swing trader, I'm going to be starting to analyze down in this range. You have the 211, 210 area right here, and then this lower trend line, which these two will merge. If we drag this out, right, and let's just say it takes a little time for price to come down there, by the time you're in, let's say, April to May, these two lines have merged into one epic area of support. Now, if we get into a recession, will this level break? Yes. But again, it's very possible we could come down into that, get a bounce, and then that could be taken out to the downside. Now, speaking of which, let's go back to NVIDIA. I already have a bunch of levels on the charts here, folks. You can see the big drop in NVIDIA yesterday, down 17%. And again, keep in mind, this was a $3.7 trillion company going into yesterday. So it dropped over $500 billion in market cap. Now, again, there's going to be big support between 116 and 113. That's not a swing trading level for me. That's more of a day trading or really a 1 or 2 day type bounce. But then you're looking at these levels down here. This one is the big one, the major support. It's this pivot high and the August low from the big drop in August. That's around $96.50. All right. So again, notice how I kind of prep, right? I don't know which level is going to get hit when, but ultimately I know my levels ahead of time. I'm doing my research. And by doing that, it takes out the emotional reaction, right? So again, instead of being like panicked and being like, oh my gosh, it seems like it's down a lot, I should just buy. We don't want to do that, right? We want to say, okay, well, what are the levels here? Now today, Nvidia is bouncing a little bit, right? We're back to about 121 or so right up here, and that could happen. I mean, you get these little bounces, the buy the dippers come in, but I need to know my levels here across the way, all right? And that's really what we're watching here, guys, all right? So let's keep an eye on that. Now, Broadcom was another $1 trillion company that dumped out 17% today. The level here is very easy to see. You guys can see right here, we have pivot high, and pivot high, and then there's a gap fill right here. So you're talking about basically 187 to 183 right in here. This would be huge, a huge level. I would think that that would be a good buying opportunity. It even looks like if you extend this out, look at this, comes basically over to this area right over here as well. So this would be that big level where you'd expect a short-term, really short-term swing trade bounce off that one. And then obviously if we do want to do more trend lines, we can start connecting these lows, and you can see even this one is just a little bit below that level. All right, Broadcom, again, great business model. They do really, really well. It's kind of been in the shadow of NVIDIA, but again, buying key levels for swing trades. Now, notice how I'm not going into, oh, I'll be looking to buy this for a long term. That's more for the legacy media, mainstream media, the talking heads, all that nonsense. I'm not even going to come to you guys and even say that I have any idea where these stocks will be in a year from now. I have no clue. All right. My guess is, again, eventually we're going to hit a recession, but could be the next year after that for all we know, right? Inevitably, there'll be a recession. The key for me is I can say, okay, based on the factors, I know if we hit this in the near term, probability is going to be for a significant bounce or a bounce that's tradable for a swing trade. Long-term investments, again, you look at names like some of these .com plays and Amazon. I mean, yeah, Amazon, if you had waited till it was down 85%, was an amazing buying opportunity in 2000 or 2001, but there were lots of levels along the way where if you bought, it took a long time for you to get back to break even. All right, back to the charts we go here, guys, as we continue on through. Let's do a quick check on a couple other plays out there. So other ones that are now interesting to me. So I had shorted with members of Smart Money Stocks and ETFs, CEG. We took profits yesterday. I mean, incredible drop on this. It was down 21%. It is coming into a swing, quick, I would say more of a day trade level here, and the swing trade level is the parallel. But again, look at how the parallel works. Amazing, absolutely amazing. Mark that top, just like it did over here for the big correction, and same thing. Maybe day tradable here around 267, 266, but then you're looking at the lower area of the parallel as your bigger support for a more swing trade opportunity. Other names of interest to me, VRT dropping 30% yesterday. And again, these are all the CEG, VRT, VST. These are all utilities that were kind of expected to have major demand for energy. Now, listen, before I get into this, let's just take a pause, okay? So one of the keys here is to understand that this is a Chinese AI model. And I want to be clear is that there's nothing that says that the US is going to be okay with US companies using this. So again, we know that, I mean, the way I look at it is if the US government has an issue with TikTok, what are they going to say about companies integrating this, this new AI model that's supposedly that much better from China? So I do want to just kind of caveat that with that's part of the idea between the charts allowing us to buy these key levels potentially for swing trade bounces is that that could be the kicker, right? So these stocks could come into these levels in the next few days, and then we buy, or maybe I buy. I'm just talking about what I will likely do, but then you get some sort of news saying, oh, the US says, A, they're not going to allow this, just like we're not selling all these chips to China. And then these things could get massive bounces. Now, again, down the line, are newer models, AI models, going to come out that require a lot less energy and are more efficient and can be run on these lower grade chips? Yes, that's inevitably what happens, right? I mean, if you look at any sort of, starting point in a technology, it obviously gets more fuel efficient or energy efficient over time and better over time. But again, the idea being is that I think we all have to kind of keep a logical head here and just say, hey, listen, the Chinese, it's very possible the US and much of the rest of the world don't want to integrate this AI model into, their stuff in their country. There's just risks involved, probably national security risks. All right, so Going back to VRT, guys, I'm keeping an eye on this. 96 today is going to be a very important level, followed by a good level at around 89 to 90. So this zone here, I mean, you can see very clearly how I come up with these trend lines. Great drop yesterday, down about 30%. VST was another one. Take a look at this. I've already annotated the lines. You can see we kissed on VST. The first level, if it breaks through this 115 to 107 zone right here, is massive support, followed by 97. But this was another one that was down 28% yesterday on massive volume. Now, most of these are getting small bounces today. You can see right here, VST traded up to about 144. It's coming in a little bit. And VRT, if we take a look at this, it's only trading up a couple dollars here. And remember, it could flush down and get on the VRT. I don't have the level till about 96 here on a day trading basis. All right. Let's turn our attention to the 10-year yield real quick, and we'll just touch base on the 10-year here. The 10-year yield was down yesterday here on the day. It's bouncing a little bit today. Notice these two lines. These are the ones that we're trading inside of. Now, remember, upsloping channels, over time, about 80% of them will break to the downside. Now, you don't know if it's going to break here or if it's going to bounce back up and then break later on. But the idea is eventually you would expect a breakdown. And that, again, is one of the reasons why I like the TLT, which, again, being long the TLT, it means that you are essentially shorting rates. You think rates are going to go down. You can see the TLT has been beaten down because rates have been going up until recently, when the TLT starts to rally because rates are starting to come down. By the way, on TLT, you can see this little pivot area right here, right? If we take a look at the trend line here, we can draw a little line right across here. That'll be a key little breakout on it around $88.30 if you can get above there. Now, again, one of the zones or the sectors that I've been talking about has been the Chinese stocks. They have, ever since I talked about these about 2 weeks ago and said, guys, this is your play, these have just rocketed. Alibaba was up again yesterday. Baidu was up again yesterday. These are really doing really well here. And I actually think, again, maybe due for a small pullback, but then I think they do go higher. So I continue to like the Chinese stocks here. Just in terms of one trend line to watch here, look at this right here. So look at this. Do you guys see what I just created? And by the way, that's my eye. My eye just saw that and I was like, oh, that's parallel to that. My eye literally, when you practice this stuff enough, your eye actually does the line for you, and then you draw it in afterwards. Now, occasionally it'll be off, but it connects the dots essentially. This is just from practicing for so long. It's something that each of every one of you, if you practice enough, will eventually do. Your eye will just scope these things out. But if you look at this, this is a parallel, right? You have this line parallel to this line, which tells us there's a little resistance here on Alibaba. You might get a small check back like this, and then maybe a breakout to the upside. But China stocks continue to look very good. Don't think that they're going to go up every day, though. They're going to naturally have pullbacks. Okay. All right, let's go to the dollar chart real quick here. The dollar's catching a little bit of a bid on the day here, so a little bit of an uptick there, so a little bit of a push. Nothing really new to dissect on the US dollar. If we zoom out, this does, listen, it's not the prettiest bearish pattern, but I would just say so far this down move and this chop, the only kind of caveat was this little dip here. But overall, this is very similar to the SMH chart that we looked at earlier on, and I could bring that up again right here, right? Down move, inside chop, and eventually a breakdown. The only difference, again, is that you had that kind of little dip in here, which I'm not a huge fan of, but just pointing out the similarities there. Next up, let's take a look at gold. Then we'll jump over to Bitcoin. Gold had a nice dip yesterday, although it is rebounding today. Again, on a technical basis, this is kind of what you'd assume, right? So you look at this and you say, okay, we have double top here. We kissed it right here. It should get rejected. It did yesterday. Maybe there's a little bit more downside in the coming days right here. That'll be your technical support. But the idea behind this is that path of least resistance would be something like this, and then your breakout to the upside. All right. So again, we'll kind of keep an eye on that. If it breaks here, which it always can do. Remember, charts can do anything they want. Just because I tell you guys what the high probability scenario is, remember, high probability means that there's essentially a higher chance it does that than not. But that still leaves the chance that it does the opposite of what the probabilities, right? I mean, if you have 80% success or 70% chance of something, it still means 2 to 3 times out of every 10, it does what you don't expect it to do, which is why I always stress to you that no trader in the world is ever is ever a pure winning trader, right? We all, if you're really trading, then everyone has losses. It's just a matter of how many times out of every, let's say, 10 will be a loser. Is it 2 times? Is it 3 times? Is it 5 times, etc.? And it's all a probability game. It's just like a casino, right? A casino makes money because they basically know probabilities are in their favor. I always say that to you guys. You want to be the casino, not the gambler. Okay, flipping back to the charts here, gold again. We'll take a look at silver next. See what silver is showing us. Silver is actually hanging out. As long as it holds above this orange line and this white line, I would continue to favor slightly a bullish bias, something like this, and then like that. If it ever breaks this white line and this orange line, let's say starts trading down here, then that's where you have to be very. That's basically where you got to stop out, right? So for me, I'm not in silver right now, but if I did get into it, you'd have to keep your stop right down here, because if it gets below here, you look at the wedge pattern, bigger wedge, it could really fall. It could honestly fall all the way down to this level down here. Okay. So again, just the idea is I'm not in a trade here, but if I did get in at some point, I would just make sure that you kind of keep that tight stop on it right below that level there, as that would be a key breakdown. Let's go to oil real quick, and don't worry, I will get to Bitcoin. Oil is getting a bounce. It did fall further yesterday. This was a great short. Again, I'm out half of my position with Smart Money Commodities and Miners members. It is getting a bounce. I still have half the position left. But again, if you think about it, are we surprised it's bouncing? Look, right down here, and then more support here. There's a lot of support. It was oversold. Let it get a little bounce. The idea here is, let's see if we put in a bear flag and then we break here, or maybe we even go lower to the downside on oil. But right now, this is a big reversal. So you'd look for the bearish kind of chop sideways to up, and then that bigger rollover. Natural gas real quick here. Taking a look at nat gas continues. Again, if you don't know your river theory, this is a great example of a river theory. It's a creation I came up with probably over a decade ago, which explains why you have a level that gets hit. This is the river, right? So you come to the river. Oh man, it's too deep to swim across. Yeah, I try it again. Nope, too deep. It just, every time it scares you away. And then you come over here and you're like, oh, look, there's a bridge. And so you run over the bridge and you're like, okay, now I can continue on my merry way. No trade for me. It's way too over, short-term down, but nonetheless, great example of a river theory where you gap over the level. It can be a gap above a level. In this case, it's a gap below the level. And again, I call it the river theory. All right. Lastly, Bitcoin, guys. Bitcoin was down sharply early yesterday, but did come back to only have a slight drop. If we take a look at this, as long as we remain below this line, I favor 92,000. If we were to close back above, then I favor upside to this 108 to 111 level. And again, these are diverging. So remember, it used to be 108 to 110, but because this is sloping up, it's going to slowly inch higher and higher. But again, right now we're below this line. This is kind of what I would call a pivot line. And as long as we're below the pivot line, the pivot means you're pivoting to the downside, or it's favored to go to the downside here. If we close back above here, you don't have a lot of upside, but it could retest up in this range. And then you start watching this double top, topping tail high, and those factors there. All right, so just to go back and recap, guys, here we have the spiders holding steady off of the highs of the day, but still slightly on the green side. Today is going to be a day where we have to monitor these markets, right? And I mean that because, is there more additional panic selling in the semis? Is there a calm where we get a technical bounce? One thing I do know is that we should get some big swings in this market. And don't forget, I mean, listen, we had earnings today from RCL, Royal Caribbean. That stock's up a little bit. GM not really doing much as well. Boeing, same thing. So I'm not even going to worry about those charts for now. But the idea is, we're now getting into the heart of tech earnings. So tomorrow after the bell, I believe Meta, Tesla, and I think one other one, I can't even recall it off the top of my head. Then we have Apple on Thursday as well. But the idea here again, guys, is major earnings coming out in the next few days, and the Federal Reserve announcement is tomorrow. There's a 2-day meeting that starts today, and tomorrow we'll hear from the Fed. That Fed decision will have implications based on what they say about inflation and everything else. So lots to look at this week. Already volatility. I was able to bank a lot of money yesterday with swing trade members and smart money stocks and ETFs. Let's see if we can't do that again. You guys have a great one. As always, I'll talk to you soon. Take care.